here we go again with another of our Evolution Consulting market updates, as they've come to be known. This one being recorded on the 7th of July, only a few days away from my birthday, which is on the 11th. And talk about one heck of a birthday present. I get to make perhaps, and I said I wasn't going to do this, but you see how well that worked out. I get to make perhaps the most meaningful smug face that I've had the opportunity to make recently. And for those of you wondering why that might be, we haven't done one of these since the results of the Brexit vote came out. So there, that's better. Try to get that out of my system. We were correct, guys. We were 100% correct. We obviously have been posting stuff since I want to say late April, all through May, as to the who, what, when, where, how, and why of said Brexit vote. And not surprisingly, the information that we discovered with Evolution 4.0 was proven correct. The UK is out of the EU, and that is largely a function to insulate the City of London and all banking entities therein from the inevitable effects of the EU implosion, which looks like the way things are going is going to happen sooner rather than later, guys. And not to toot our own horn, so to speak, one smug face is enough for a market update video. But in addition to forecasting the vote correctly, and funny side note, I actually really didn't watch much of the vote tally. All I watched was the Kitco spot price of gold chart. That told the story, guys. In addition to being correct on the vote outcome, we were 100% correct on, almost to the dollar. We were almost to the dollar correct on the market, the gold and silver market reaction or spot price market reactions to the Brexit vote. Okay, so kudos to us. Guys that took our advice, we did one of these on the 22nd. Was it 22nd of June, right before, and we said, I will directly quote myself, long all the usual suspects, USLV, GDXJ, JNUG, NUGT, and for those of you that acted on that advice, for those of you that took that advice and adjusted your portfolios accordingly, once again, my birthday is coming up, and if you would like to say thanks, a bottle of Macallan 15 would be cool, Macallan 18 would be great. Or Tommy Bahama shirts. But nonetheless, guys, again, and you have to understand, when you work on a program as hard as we've worked on Evolution 4.0, and more recently we're getting ready to go forward with Evolution Ultra, when you see that kind of accuracy, from the vote outcome to the market reactions to all the surrounding the ancillaries, it's hard, guys, not to stand back and just go, hell yeah, we're doing it right. So kudos to us. In the meantime, hopefully you guys have acted on that. You acted on those trades and everything, because I'll run some charts across the screen while I'm talking here. But all the usual suspects, as we like to call them, GDXJ, JNUG, NUGT, USLV, SLVP. We'll put up a couple of those. Absolutely, we were kind of joking around on Twitter and said we had to buy an extra set of monitors to put on top of our monitors to see where in the hell those charts went off to, because they're out of the gate and they're going. Okay, and rest assured, guys, this is only the beginning. Okay, it's not like you'll hear if you listen to one or two of the few talking heads that are left that are saying short gold and it's overrated or whatever the case may be. Well, first of all, ignore them. Second of all, guys, this is only the beginning. So if you missed the initial run-up, what we're trying to convey here is that what we're talking about now, it's not just one thing. It's not, it's the Brexit vote, and that'll drive metals higher, and then that's it. It's the Brexit vote, followed by another catalyst, followed by another catalyst, followed by another catalyst. So it's going to be this, okay? They call it the stairway to heaven pattern, if you will, okay? The Brexit and Brexit-like events, to which we will say, major referendum votes, such as Brexit. France, believe it or not, is already, talking about an exit from the EU, and that one kind of caught us by surprise. We were like, we thought France was all about the EU, and now they're talking about doing an exit stage left. And not surprisingly, the rumblings in Germany are starting about an exit from the EU, and that's the one that we did forecast, and we have a feeling we're going to be very, very correct on. And if we are, you can rest assured there will be an additional smug face made. Oh, yes, there will. But in terms of, um, you know, to look at that one Brexit event and say, well, that was it. You missed it, and you had to be in that trade, guys. It's going to happen. I mean, fairly consistently now. And what we're seeing is more importantly than, okay, the UK is out of the EU, and the city of London is now insulated from the inevitable implosion of the EU, guys. And we've joked around about this before, but I mean the information that we're seeing now is just absolutely tremendous. Spoiler alert: the city of London is not stupid. That is the Anglo in the Anglo-Western banking system, okay? The City of London is. Bank of England, amongst others. We could say RBS as well, Royal Bank of Scotland. But Bank of England is the big one. And, okay, to put it delicately, they bailed. They jumped ship on the Anglo-Western banking system. So they're really, I mean, we kind of call it was still for the purposes of communication, we call it the Anglo-Western banking system, but the England in the Anglo-Western banking system did an exit stage left. And we have every reason to believe and every reason to observe that they have gone the way of the BRICS nations. Again, they're not stupid. Okay, of the components, if you will, and I don't talk about that stuff really anymore, but the components of the Anglo-Western banking system, the City of London, that's pretty much where all the real decisions are made. It's often said that Wall Street's somewhat of a dog and pony show, and to some component that is true, but the City of London is where most of the real top-level banking decisions are made, and not surprisingly, they're not stupid. They see the way the world is going. They see that the world is transitioning, try that one in English, transitioning to a unified metals-backed currency and a currency consolidation. And these are all the natural effects of the evolution based upon the speed of information, the speed of transactionary business, and a million other variables. It's just the way it is. Deal with it, as we so often like to say. But they jump ship, okay? They saw the Anglo-Western banking system, going over the waterfall, and they hopped on the other ship that was headed in the right direction. So, the city of London, guys, now is firmly in the corner of the BRICS nations. And for metals investors, you should be doing the happy dance, because that is the worst nightmare of the Anglo-Western banking system. What's left of it, that is the worst nightmare come true for them. Okay, because in order to, and there's been many people. There's some really funny guys on Twitter. That often, they kind of lampoon the Federal Reserve System and the COMEX for selling paper trades and shorting gold, and there's metal manipulation and so forth. Well, you got the Shanghai Metals Exchange. Okay, that is the be-all and end-all, or close enough to it, the be-all and end-all of setting the spot valuations of metals at this point. The only counter to the Shanghai Gold Exchange, guys, is the U.S. COMEX market, effectively the Federal Reserve, okay, and the City of London. Now, the Federal Reserve and the U.S. COMEX just had their nightmare come true. The City of London, the only other thing that could really help them try to repress the valuations of metals and stop the rise in the valuations of metals, is now going to help increase the valuations of metals. I'm sure that was part of an agreement between the City of London and whatever BRICS nations banking entities may be out there, probably in Shanghai. Okay, so rest assured, guys, that is the absolute nightmare scenario of what's left of the Anglo-Western banking system, and I think that will go down in history as the moment that, if I may quote a Daft Punk song, that's the day the game changed. Okay, because now we're going to see, the U.S. COMEX market, or the U.S. COMEX, guys, and the Federal Reserve, all their monetary policy and jumping up and down in the world. I mean, first of all, it's going to be ineffective. Second of all, it's going to be laughable. Third of all, it's going to be obvious. And fourth, it's not going to work. Okay? So, metals investors, we said it in the very beginning, January of 2016. If you got our issue of Wirehouse from January, we said 2016 is the year that metals investors have been waiting for. And not surprisingly, hey, when you're good, as they like to say. But the fact of the matter is, this is going to be a huge year for metals, guys. If you're interested, if you'd like to purchase it, Wirehouse this month it's a double issue. It's a double feature, as it were known. It's a June-July issue, and we just did a huge piece that discusses in greater detail what I just talked about a little bit there with the as far as the BRICS nations, the City of London, that alliance. Amongst other things. But there's a lot of good stuff in it, and some of it deals specifically with silver investing and so on and so forth. So if you're going to subscribe to Wirehouse, this would be the month to do it. If you subscribe a little bit later and you want the June-July back issue, we'll very happily send that along. So that being the end of our bit of self-promotion, we move along to Bitcoin, something else we've been proven very correct at. Again, if you go to our proven forecast page, there are timestamps there. And the reality of the situation is, guys, again, tulip bulbs in Amsterdam. Not going to talk about it in any excessive detail here, but tulip bulbs in Amsterdam. The same thing that's going to drive those metals markets higher, be that the Japanese yen, a shaky UK pound, pound sterling, or a euro dollar. The same instability that's going to drive metals higher is going to drive Bitcoin higher as well. The only difference between the two is Bitcoin is effectively the tulip bulbs in Amsterdam. It's going to be speculation driven, and that's fine. You can make all the arguments you want about that. Only time will prove who's correct as far as how the way of Bitcoin. But for purposes of a trade and purposes of adapting to a new system of economics, guys, it is one hell of a vehicle to convert paper into more paper, oddly enough, and into metals. Not all that different than using equity market index funds, which, speaking of, based upon Evolution 4.0 analysis and Evolution 4.0 research, guys, markets are going higher and metals are going higher. And if that does sound vaguely familiar, it's because I may have mentioned that several bazillion times since 2014 when speaking in terms of the beginning of hyperinflation and the beginning of a real transition in global economics, guys, and that's what we're starting to see now. That's why I get to say "told you so" many times. We've been doing this publicly since 2014, all right? And a lot of the stuff that we talked about now is all starting to happen. So I give myself clearance to make the smug face. Apart from that, speaking of, before we obviously. Those who are truly observant will notice that we have a very new, shiny, lovely, wonderful facility that we've moved the Evolution systems to. And it's absolutely wonderful, spectacular here. Got a lovely patio I can go out and smoke on now. It's a wonderful thing. But before we left, and I don't recall the date as I'm doing this now, but it was right before we evacuated the bunker, as we like to say, permanently. Which is our old facility, as I've come to call it. I did do a market update. It was a post-Brexit piece. I did not get a chance to edit it. I did not get a chance to, piece it together, put all the graphics and everything. I started to, and I just didn't. And as you know, I don't like to publish old stuff. I don't like to publish, like 2 weeks ago, we put up a video and it's like, oh yeah, see, told you so. I like to use the timestamps on YouTube and so forth as a verification of our forecasting accuracy. It just happens to work that way. It's been very effective so far. But in the interest of something that I didn't mention, really leading up to the Brexit, most of the stuff we were talking about was metals. Okay, most of the stuff we were talking about was gold and silver. I really didn't mention U.S. domestic capital markets, and I'm sorry about that. I really should have. But we did a piece where we forecasted the day, the 2 or 3 days following the Brexit where the markets did a nosedive, which is when we were recording that, and we called the bottom perfect. Okay, and we said, you know what, it's probably going to test the high 16s and it's going to turn. Okay, and it's going to recover right back up because we have a market that's being fueled by an otherwise completely asinine amount of liquidity and short attention span theater. Now, normally I would not post that anywhere and just say, you know what, opportunity missed, should have put it up, didn't have a chance to edit it. But I am going to use a brand new method of timestamp verification. You're just going to have to go with me on this one, guys. You've already seen the accuracy of the system enough times, but in the interest of maintaining absolutely empirical record of accuracy, I'm going to resort to the facial hair verification system. As you can see, normally when I do these videos, I am all clean shaved and just look very nice. But as you can see, we've been moving. I've been lugging boxes up and down the elevator and doing all that good stuff. I have not had a chance to shave, not because I'm lazy, but because I have no earthly idea where I put my electric razor. I'm sure it's packed up somewhere. But when I recorded the first video, I was very clean shaven, and as you can see, I've grown something of a playoff beard. So, guys, you're gonna have to take my word for it, and also you can, if necessary, to make you feel any better, observe the facial hair timestamp verification, because this just doesn't grow in overnight. All right, so I'm gonna put the clip up, and here it goes. So now we have the market down 900 points or some asinine number like that, which, guys, we did forecast, but we didn't mention it in any of our videos. We were too fixated on how the metals markets and such would react, turning paper into metals. We really didn't make reference to or forecast what happened as far as U.S. domestic equity indexes and international equity indexes, your DAC, your FTSE, and all that fun stuff. So they all got absolutely freaking clobbered. So
basically at this point in time, in fear of sounding like maybe some of the talking heads on CNBC, we're going to say it. We may catch a little flack for it, but we're going to say it, guys. Buy the dip, but don't just buy the dip. Don't buy the index dip. Don't, there's a way to do that. Okay, and we got to go back to our 3 C's of investing, kind of fundamental approach to trading at this point, and that is, all right, you just got the market just got whacked for 900 points. All right, basically, 2 days where it's just like, all right. You got at that point in time, you got to think a number of things. Number one, we've seen all this before, okay? And what happens is, and I've said this a multitude of times, is that you get what I call short attention span theater trading. You got a news cycle now. What's the news cycle? The news cycle is Brexit, okay? And as a result, you got these ridiculously gigundous sell-offs across, every major equity index or market index, or really, across the planet at this point. So us being the logical thinking, intelligent people that we are, we go, okay, well, that's the moron reaction. What do we do? Okay, and what we do is we take a look, and this applies now to, for those of you that are in some of the trades that we recommend. I'm going to pick some specific ones here in a second. But those of you that are in the trades, relax, hang tight. If you got stopped out, hey, you know what? Rebuy at lower levels. All right, that's the way it works. That's how you make money in this market. You need volatility to make money. Okay, but for those of you that didn't act on some of our plays, okay, and I'm gonna be very specific here. Taser, Smith & Wesson, Ruger, Olin, U.S. Concrete, and Caterpillar. You say, well, what the hell do all those have to do with each other? And the answer is those all fall under the heading of one of the C's of our investing, and that is a chaos. Okay, and if you're interested in that, please subscribe to Wirehouse, because we do outline in graphic detail what we mean by 3 C's of investing. One of our 3 C's of investing, makers of Winchester ammunition, still kind of hanging tough there. All right, so let's take those 4: Taser, Smith & Wesson, Ruger, and Olin. How have they been directly affected by the Brexit? Trick question. They haven't. Okay. At the end of the day, the Orlando shooting still happened. There's a freaking mass shooting now. It looks like every single day. Okay, and gun sales are increasing. Okay, now we know. Okay, and you don't need Evolution 4.0 for this, but based upon Evolution 4.0 analysis, guys, here's the deal. Okay, Brexit, short attention span theater. I give it maybe till middle of the week. Okay, and that'll be like, Brexit what? Okay, yes, there is a long-term effect there, but at the same time, for purposes of trading, you got to remember we exist in a speed of information, short attention span theater world. So the reality is, do we see the market rallying back up from 17,000? Of course we do. That's just the way it is, guys. All right. So at this point, we'd be long. Or if you're not in already, or if you watched the videos that we put out and you saw some of our recommendations and you didn't act on them, okay? Taser, Smith & Wesson, Ruger, and Olin. All right, those specifically, Smith & Wesson and Ruger, have been making headline news like every other day now because of obviously what happened in Orlando, amongst other things. The reality is those companies are going to report their earnings next quarter, and they're going to be ridiculous. All right, the demand for firearms, specifically .223 caliber, even amongst new demographics now. There have been articles out there saying like all of a sudden the gay and lesbian community is now purchasing firearms because what happened in Orlando. And I said, well, that's clever. Like, so somehow we figured out how to get the Second Amendment, ideology over to the left wing. That's creative, isn't it?
Right. And as you can see, we forecasted the rebound. Again, short attention span theater type of trading. That would have been a great buying opportunity. And something that we don't talk about enough, and I promise I will do a market update piece on them soon, is the how to use the inflation or hyperinflation, which typically drives capital markets. I've spoken at length about it doing live radio, but how to use the U.S. domestic capital markets and equity indexes. Just if you want to trade only at an index level, you can do. And you can do the same thing, paper into metal, that you could do with the your metals ETFs. That being said, I have a whole bunch more I told you so's, but I'm going to save those for another video. And also, we have a video coming up by request, and that by request is from one of our followers on Twitter. Heck of a nice guy, who suggested we take a look at subprime auto lending, or auto lending as a potential bubble. And that is something I think Jamie Dimon spoke about, and a bunch of other folks have spoken about. But we put that in the same category as student loans in the kind of unspoken debt bubble department. So We will be doing the research on that. That was a really good idea on his part. So again, we're thankful for our followers on Twitter. You guys are just pretty consistent with some pretty awesome ideas for us to research, and if it helps us paint a picture of what's going on, big picture economics wise, we are all about it, man. So thumbs up to you. And that being said, guys, hope you're enjoying these. Again, I'm very happy I got to make the smug face, and as you can tell at this point, if you go to evolutionconsulting.world, you can take a look at our Evolution 4.0 proven forecast. Okay, suffice to say, we're not guessing. Okay, the system that we have built, I am just absolutely almost beyond words for, and we're going to share a little spoiler alert here. We will be putting together the hardware for Evolution Ultra soon. Okay, and I'll be doing a video a little bit about just some of the system upgrades and all that fun stuff. But one of the things that I've mentioned on Twitter, and it's a true fact, is we've only been running Evolution 4.0 almost intentionally on absolutely minimal resources. So the accuracy that you guys have seen, from the Brexit vote to calling the turns in the market to specific equity picks to commodities, all that stuff, we're using only about maybe 5 to 10, not even, I don't even want to say 10, I want to say we're using about 5% of what the software is capable of. So that was done intentionally. If you can think of a batter playing baseball, you put that big weight on the end of your bat and you swing it back and forth, because when you take it off, all of a sudden it becomes so much easier. So we've almost, something we like to call, we bulletproofed our system intentionally by running it in, with just absolutely minimal resources. So now that when we turn it loose full speed, it's going to be like, and we're not going to turn it loose full speed yet, but the new hardware configuration that's coming in, guys, if you think the accuracy has been impressive thus far, you ain't seen nothing yet, as Bachman Turner Overdrive once sang. But that being said, guys, I hope you're enjoying these. I hope you guys are making money along with us. I really do. The reason I do this is I had a hell of a lot of fun when I was doing radio. I don't think it was the right audience. I don't think they really appreciated the information that we were sharing or how to properly make use of it, and that's okay. We did need a proving ground and a testing ground for what we were going to do. But that being said, I hope you guys are making money along with us. I hope you guys are prospering. Like I said, it's one thing to bitch, whine, moan, and complain. It's another thing to make a buck and sit back, relax by the pool, and perfect the art of occasional daytime drinking while going, I'm winning. Okay, and that is what we are all about here. So hope you guys are making money. Email somewhere over in this region. Info@evolutionconsulting.world, info@evolutionconsulting.world, as Jeremy Clarkson would say. If you want to email us, if you have any suggestions, we've been getting absolutely barraged with emails lately, so I think people are really finally starting to kind of figure out, like, oh, these guys really do know what they're doing. So, and it's to be expected. I understand what we're doing is cutting edge and very new, but also, if you want to follow us on Twitter, it is at Evo_consultants, Evo_consultants on Twitter, which is where we post some of our day-to-day stuff. By the way, we've not been on there a lot because we literally don't have an ISP in here yet. Figure that out, right? As far as anything else goes, guys, Wirehouse this month. If you're going to subscribe, please do. Thank you again. Thank you for the patience for while we're relocating and everything. So, as we often say, accurately so, be good. Everything really is a transaction.